Hello everyone, can you hear me?
I can hear you, Alan. I don't know if you can hear me.
I can hear you, Mike. Can the conference hear me?
Mr. Allan Pickett, welcome, and the screen is yours.
Hello, can everyone hear me? Hello?
Yes.
You can hear me. Can you just wave if you can hear me?
Yes, we hear you.
Okay, all right. Arman, can you put the slides up, please? Okay, so I will, you can see my screen now?
Yes, you can see.
Okay, so I will start. I'm sorry about the delay. So hello everyone, I'm Allan Pickett, and I head up the fertilizer analysis team at IHS Markit, which was IHS Markit until Monday, but we've now become S&P Global. In any event, I suspect most of you will know us as Fertecon. I'd like to start today by thanking the Arab Fertilizer Association for asking me to speak and join in on the Q&A session. I'm very sorry I can't be there in person. They have asked me to speak.
Sorry, Aman.
Yeah.
You have your screen is very small. Could you press on display setting?
Sorry, could you repeat that?
Press on display setting at your presentation.
Sorry, press what?
To maximize the presentation. At the top of the presentation, at the top of your presentation, there is display setting.
Display. Okay, yeah.
Yes, duplicate.
Duplicate. Okay, there we go. Right. I apologize for being.
Yes, that's nice. Okay, thank you.
Okay, so let me go back one. Right. Yes. So yes, this is going to take now a little bit longer than the 10 minutes that AFA asked me to speak about. In presenting the outlook for nitrogen, I'm indebted to my team, the members of which you can see on the screen now. I've been involved on the analysis side of the fertilizer industry for about 25 years. In that time, other than some unfortunate accidents, mostly involving ammonium nitrate, I don't honestly remember any fertilizer stories hitting the headlines of mainstream media in the way they have been over the last 6 months. The current events we're seeing in the fertilizer sector are genuinely highly unusual. So let's talk about recent developments. There won't be one of you listening to this that will have not seen or possibly been affected by the significant increases in price. These are across the board for the fertilizer sector and certainly impacting nitrogen. So what's causing this? There are a great many factors, but for the sake of brevity, I'm going to focus on 4 here. Underlying both the increase in energy costs and demand for nitrogen fertilizers is the impact of COVID and the pandemic. The dramatic reduction in travel over the last 2 years, coupled with the economic impact of lockdowns, saw the supply and demand of oil and gas become disrupted. Initially, supply exceeded demand and pricing fell to almost record lows. Then, as the industry managed to secure some balance, the economic rebound has been faster than expected in many areas, causing shortages and higher prices. Similarly, a perceived need for food security has kept crop prices high, enabling farmers to continue to make a margin whilst paying high input prices. So at least through the second half of 2021, the high fertilizer prices did not unduly constrain demand. I wanted to highlight 2 points regarding energy costs and demand, however. The first is that energy costs are a regional issue, a serious problem in Europe and Asia, but US costs, which are high, have at least until recently been within very normal ranges, and some parts of the world, including the Middle East, often have fixed term contracts for energy supply to fertilizer plants and are not directly impacted by changes in energy prices. Secondly, as you can see in the top, the graph on the top right, the key staple crops four key staple crops, the stocks to use ratio are relatively high. Suggesting no fundamental shortage of food. The current strong demand is therefore more driven by uncertainty than real shortages for staple crops. Also linked to the pandemic is the sector here on geopolitics. Clearly, the major concern today is the ongoing conflict in Ukraine, but as Mike will be speaking on that, I won't, but I will be happy to contribute to questions. Other than Ukraine, both China and Russia have put restrictions on exports in order to ensure abundant domestic supply of fertilizer to try and moderate domestic prices. This has tightened the global supply-demand balance and put pressure on price. In the case of UAN, this has further been complicated by the US imposition of countervailing duties, requiring changes to trading patterns. Lastly, the investment cycle has been at a low point, where annual capacity increments between 2018 and 2020 were less than annual demand growth, which has steadily been tightening the supply-demand balance and increasing the price. None of these disparate inputs would have individually had the impact on prices that we've seen, but put them all together and we've had an impact on price significantly increasing production costs and distribution costs at a time where demand has been strong. I'm probably very close to halfway through my time, so we'll move straight on to the outlook. Firstly, a disclaimer which you might anticipate. Most of the forecasts shown here were generated before Russia invaded Ukraine. Therefore, a key assumption that diplomacy was marginally more likely to be the successful outcome, which was rated at between 50 and 55%, has changed. On this slide, we have our short-term energy assumptions prior to the invasion. As you can see, we expected European prices to moderate substantially. However, it is very important to note that even if they do, in historical terms, they will remain exceptionally high in the 13 to 15 MMBTU per ton range, MMBTU range. The impact of any protracted conflict in Ukraine and the inevitable loss of Russian gas supply to Europe will most likely mean that until there is a resolution, there will be no moderation in European gas prices. At the high levels, and the high level for global energy benchmarks, such as Brent crude, are likely to push Henry Hub prices higher as well. So the key takeaways are that energy prices will remain high in historical terms, whether there is a quick conclusion to the Ukrainian situation or not. Just as the actual level that will be impacted, it is just that the actual level will be impacted and therefore no immediate production cost shelter for nitrogen producers not on fixed energy contracts. The potential for a peace dividend, with prices coming down further than forecast here, seems as distant hope at the current time. We'd normally expect the price for urea to fall heavily in 2022. This is because delays to projects have resulted in some 14 million tonnes of capacity now being commissioned in 2022 and 2023, compared with typical annual demand increments of around 2.5 million tonnes per annum. Global utilization rates will fall to their lowest levels since 2000. Key to 2022 outcomes will be the status of Russian exports. Russia is the single largest global exporter of urea, typically around 7 million tons. China has restricted exports to try to keep domestic prices low by demanding legal inspections for any exports. Chinese exports are typically around 5 million tons annually, so together Russia and China account for around 12 million tons of trade. This is marginally less than the total new capacity coming on stream, although of course some of it is in Russia and China. So the extent to which prices rise or fall will be governed by the actual level of Russian exports compared to the speed of ramp up of new capacity, especially in India, Brunei and Nigeria. If Russia cannot export and the capacity ramp up is slow, there will be upward pressure on price and vice versa. Higher than forecast gas prices will also moderate any fall in urea price. In January, urea prices fell from around $845 a ton to $550 a ton, basis FOB Baltic. But in recent days have firmed significantly again, trading at over $800 a ton. Uncertainty of outcomes in the Ukraine will maintain upward pressure on prices, and as noted on the slide, most of the risks to the short-term forecast are on the upside. The situation for nitrates is different in that there is no major surge in new capacity. Prices were expected to moderate somewhat as lower feedstock prices fed through in the second half of 2022, but be maintained at historically high levels against key global benchmarks. In terms of production, nitrates do not have the same geographical spread that urea has. Unlike urea, high European gas prices cannot easily be offset by importing finished product from elsewhere for the simple reason that capacity is limited. For example, 85% of UAN capacity is located in Europe, Eurasia, which is predominantly Russia, and North America. The situation is not quite so acute for solid nitrates, but if China is excluded, then Europe, Eurasia, and North America still account for 70% of capacity. It follows that there are no easy solutions to the combined problems of high European energy costs and the current issues in Ukraine. Any product produced in Europe will have high costs and therefore need a high price, and Russian material is not readily available to offset the problems. The short-term outlook is based around the expected supply-demand balance, coupled with the forecast for feedstock prices in critical production regions such as Europe. The expected moderation in price is mostly based on the forecast reduction in feedstock prices. There is some more minor contribution from a weakening of the balance as sustained high prices begin to cause some demand destruction. As noted on the slide, pretty much all the risk is to the upside, and without a reasonably swift solution to the crisis in Ukraine, it is likely that prices remain at current levels for much longer than previously anticipated. Before I conclude, I just wanted to point you to a strategic study we've published on the potential for carbon-free ammonia. I'm sure we all hope that the current problems in Ukraine are resolved quickly, but the issues surrounding climate change will take years to correct and resolve. The study provides a comprehensive review of the current status on technologies, regulations and costs, and forecasts how the industry may evolve through to 2050 and beyond. Do contact us if you want any more information. I'm up on time and I need to wrap up. In summary, I'd just note that the market is currently more uncertain than probably at any time during my 38-year career. However, the fundamentals remain important. Fertilizers are commodities and prices will always respond to the balance between supply and demand. Equally, farmers will always have a keen eye for the bottom line and will only pay prices that make commercial sense. These two touchstones suggest nitrogen prices should moderate in 2022, but unless and until the conflict in Ukraine is resolved, the risk to the fundamentals remains on the upside and the market will remain febrile with high prices. That's all I plan to say at this time, but I look forward to contributing to the Q&A session. Thank you.